Welcome to the EMX Royalty Update presentation. Thank you for attending. I'm Dave Cole, CEO, founder of EMX, ticker symbol EMX on the New York Stock Exchange and ticker symbol EMX on the Toronto Stock Exchange. I always like to review our business model because it's the unique aspect of EMX Royalty Corporation. We approach the royalty business differently than our competitors, and specifically, many of the royalties, the bulk of the royalties in the portfolio, have been grown organically through the royalty generation process, which is the prospect generation business model focused on the royalty component of the deal. We acquire large tracts of prospective mineral rights around the world, add value by building economic geologic models, and selling those assets on for a combination of cash, shares, work commitments, typically escalating annual payments tied to stage gate advancements of the projects and advanced minimum royalty payments, in addition to always a production royalty on the back end. And we've been organically growing a royalty portfolio by executing that business model now for 17 years. In addition to that organic royalty growth, which is very astute allocation of capital long term, we also buy royalties. Buying royalties is a very difficult business. Royalties trade at a distinct premium because they are phenomenal financial instruments, specifically because of their embedded optionality. Most specifically, discovery optionality, but also commodity price optionality, infrastructure development and metallurgical technique and technological advancement optionality, all built into those contracts. And that makes them very special things. And the fact that they're hard to buy speaks to the value of what we are building through the organic royalty generation process. I believe that the integration of buying royalties and growing them organically is particularly powerful. EMX also makes strategic investments utilizing the same team that is out doing our organic work and identifying royalties to be purchased. Our strategic investing history in our 17 years in the business has been fantastic, with a 40% internal rate of return on invested capital over that time frame. That's after tax. This is our global portfolio that we built over the last 17 years by executing this unique approach. We're very large mineral rights holders in the Western United States with exposure to over 9,000 mining claims. Recently purchased a portfolio of royalties in Chile, and I believe that we'll grow that portfolio over time. We have 18 royalties now in Chile. We're very large mineral rights holders in Scandinavian. In fact, we're the largest mineral rights holder of any company in Norway and the second largest in Sweden, with a growing portfolio in Finland. This has been an area of excellent deal flow for us as we've been executing our royalty generation model there now for over a decade with nice success as applied towards a number of different commodities, including battery metals, gold projects, and lead zinc silver projects. Turkey's been a good business unit for us since the beginning of the company. We've cycled through over 250 licenses in our time there, and there are 3 mines being built. And this is an excellent example of value creation of royalty generation. I'll specifically discuss later in the presentation the advancement of the 4% royalty at Balya, which will become our next significant multi-million-dollar. Then the company maker in the portfolio is our exposure to the Timok Magmatic Complex, which was the first business unit in EMX's history, where we have exposure to the very large, one of the largest ongoing copper gold development stories in the world, now being advanced by Xinjiang. And I'll give you a slide or two to illustrate what's going on there. We're very excited about that. Long term, that's going to become a kingpin royalty for the growth of EMX in the future. This pyramid illustrates nicely the embedded optionality within our portfolio. Our job is to continue to put quality, discovery opportunity, and mineral right holdings into the base of this pyramid, get them sold off, where then our counterparties are paying to advance those assets, as well as employing their intellect to be able to bring those assets forward. And all of us as EMX shareholders are exposed to all of that discovery optionality. And there's multiple examples of that coming to fruition within our portfolio, and we're in a nice position today where a number of assets are coming up and becoming distinctly cash flowing. And we're on the cusp of this company becoming very nicely positive cash flow over the course of the next few years. Some of the significant value drivers in the Western United States would include our 19.9% interest at Rawhide, and I'll give a slide discussing that in greater detail, in addition to our portfolio of projects being advanced by major companies, some of the largest companies in the world, in fact, as well as junior companies across our portfolio. As an example of repeat business that we have with major companies, we've sold 6 projects to Rio Tinto in the last 4 years. We're happy to be able to provide them with discovery opportunities and build a relationship with these major companies. I mentioned Rawhide. This is a strategic investment of ours where we own 19.9% of the equity in this company. It's a private gold producing project in Nevada. Quite profitable. This was an excellent investment at $1,400 gold, at $1,700 gold. We believe this will be a cash cow. We're working on a 43101 compliant document so that we can give greater clarity to the market as to the potential of this property. That should be forthcoming within the next couple of months. But I will say that I'm quite bullish with respect to how things are progressing here. We're currently pouring about 100 ounces per day. A great example of the embedded optionality in the portfolio is our royalty at the Taylor deposit, also known as the hard shell skarn of the Hermosa project, now being advanced by South 32 after they purchased it from Arizona Mining. We originally sold these claims to Arizona Mining many years ago and kept a 2% uncapped, unbuyable royalty. And a great example of discovery optionality that comes at no cost to the EMX shareholder. Arizona Mining went on to make a huge discovery here, sold it to South 32. They've now drilled some fantastic holes right on the border of our property, and that mineralization undoubtedly extends onto our royalty ground. This will become a key royalty asset in the future. One of our largest is on the Carlin Trend, in the northern portion of the Carlin Trend, now operated by Barrick as part of the Nevada Gold Mines joint venture with Newmont Mining Corporation. This asset's paid over $13 million since we've owned it. And the great news is that Barrick has announced continued discovery within our footprint. This is one of the key areas that they highlight in their presentation on the Nevada Gold Mines website. And you can see the drill indicated resource potential that Barrick highlights within our footprint is substantial. This will become continue to be a key asset of ours as the company grows. Fennoscandia has been a focus for us now for over a decade. We're large mineral rights holders in Fennoscandia. We have excellent deal flow here, having sold off a number of copper projects, gold projects, battery metal projects, etc. I'll point out that the 14 licenses that we have royalties on in the gold mine, which is a multi-million ounce gold endowed mineralized structure in central Sweden. We have vended those into a company called Gold Mine Resources, backed by PI Financial. We expect that company to come public here within the next couple of months. This is a great example of the type of deals we do, where we sell these licenses in exchange for cash, shares, ongoing work commitments, and royalties on the back end. And in this case, we have a nice share position in Gold Mine Resources. We wish them very well. We're happy to be equity participants in addition to the royalty equity that we have on the projects as well. So I mentioned that there's 3 mines being built on our projects in Turkey. Most importantly would be Balya, which is the advancing lead zinc silver discovery. Balya will become a multi-million-dollar annual cash flowing royalty, as the company that owns the 5,000 ton per day mill has acquired the project to the north, where we have our 4% uncapped royalty. Most important asset in the portfolio today is our royalty over the huge discovery at Brestovac, being advanced by Xinjiang in the Timok magmatic complex. Many people call this the Timok project. The upper zone will be in production in 2021, as defined by a memorandum of understanding signed between Xinjiang and the Serbian government, whereby they will invest $474 million in capital to advance that project into production. The lower zone, when they do get to the lower zone, which should be perhaps half a decade into the future at this point in time, is absolutely huge. It's currently 1.7 billion tons at 0.86% copper and 0.18 grams per ton gold. When that goes into production, this will become a very significant asset to the EMX shareholder. So a combination of our strong strategic investing performance have put us in a situation where we have lots of cash in the bank and no debt. We have nearly as much money in the bank as we've raised in the entire history of the company. Our royalty generation has built a portfolio of royalties around the world, covering nearly over 3 million acres of mineral rights at minimal cost as compared to our competitors who pay dearly to buy royalties. Some key royalties within our portfolio that we have purchased, and you'll see more deals forthcoming where we buy royalties to augment that portfolio. And we think the real power here is the combination of buying royalties as well as growing them. And all this culminates into greater cash flow, particularly over the course of the next 2 to 3 years, which will result in a repricing of our enterprise. Thank you for listening.